on a day where we're seeing a relatively strong rally, Carol Massar,
Yeah.
for the second straight day.
Yeah, so good news, but we are well off our best levels of the session. But if you're something like a semiconductor stock, man, you are seeing some real big outperformance, up about 4%, off its highs as well, but definitely a big gainer in today's session.
Yeah, but let's talk about why this is happening. Optimism over comments from the Treasury Secretary and the President about progress between the U.S. and China. But is there any there? Do we know exactly what's happening? Do we understand what the trade deal or a trade deal will look like and how long it will take? I don't think we do.
There doesn't need to be a there for now. They just need to be saying the right things to signal to investors that things are not as dire as people had worried. The real focus is going to be on earnings and what the companies tell investors. And there's a Bank of America tidbit about how the ratio of positive to negative comments on macro conditions this earnings season is on track for the worst proportion since 2009.
Yeah, but it's kind of interesting, too. I mean, I did find some encouraging signs. And I know the earnings season's still young, but when you looked at what Boeing had to say, and I know that's more of a turnaround story, a little idiosyncratic, but that was encouraging. But also what you heard out of Vertiv and GE, Vernova, Otis, Thermo Fisher, and a few others, and AT&T, which, I don't know, is knocking it out the park for some reason. Everything old is new again. In fact, do you know this, Carol Massar?
What?
The number one performer in the S&P 500 today?
It's a name, yes.
It's a company that makes components for cable television.
And the ticker is APH. It's on my gainers list.
8.2%, front-running Carol Massar there. Let's get right to the numbers as we await a slew of earnings coming after the bell. The Dow Jones Industrial Average higher by more than 400 points on the day, or about 1%. The S&P higher by 88 points, or 1.7%. The NASDAQ Composite closing higher by about 2.5%. And the Russell 2000 holding on to most of its gains on the day, up 29 points, or 1.5%.
All right, well done, Mr. Bostick. Looking at the S&P 500, 361 names, guys, higher in the index.
It's just Romaine to you, by the way.
139 to the downside, 1 unchanged.
All right, taking a look at the IMAP, tech, consumer discretionary, and communication services. Those are the groups that the Mag 7 belong to, leading the way, all up by at least 2%. Your laggards today, those two thin red slices, consumer staples, and energy.
All right, quickly, in terms of some of the gainers, Tesla up 5.
Square pizza, maybe we can do that one.
The grandma's pie?
Yeah.
Love that.
Sorry, or rectangle.
Seriously?
Sorry. Keep going, Carol. We got earnings coming up.
Tesla up more than 5%. We know the deal. Elon's like, I'm coming back to the office. Top gain name in the NASDAQ 100 and the S&P 500. And let's go to the earnings.
All right, we are getting Texas Instruments crossing the wire. 1Q EPS coming in above analyst estimates, $1.28. The street on average was looking for $1.07. Total revenue in the quarter, $4.07 billion. The street was looking for $3.91 billion. CapEx also coming in relatively in line at about 1.1. And here's your forecast for the second quarter. The company sees second quarter revenue coming in at 4.17 to 4.53. The lower end of that range is above the average of street estimates. And on EPS, second quarter EPS of 121 to 147. The low end of that range is right on the nose of the average of street estimates. You see the market reaction there at the bottom of your screen, up 7.5%.
And the company also makes really clear that they invested $3.8 billion in R&D as well as expenses. They invested about $4.7 billion in CapEx and returned $6.4 billion to owners, presumably through share buybacks and dividends.
Okay, not getting a lot of commentary in the release. We're going to have to wait for the call to get some commentary, but worth repeating these numbers. The bottom line, first quarter EPS beating estimates at $1.28 versus estimates of $1.07. And then second quarter revenue, that outlook, as we heard, $4.17 billion to $4.53 billion. Estimates are for $4.12. So that beating estimates there. Shares higher right now by about 6%.
You know, what's interesting, too, is we were just talking with Angelo Zeno over at CFR Research, and he said, look to see what they say about China and their revenues, because that's about 20% of their top line numbers. And so whether or not they're seeing any kind of pain, but I got to say, these are really strong numbers. Yeah. Investors like it. Sorry, go ahead.
I am curious to kind of see what they say on the conference call. I mean, I was going through the release, too. They don't really no mentions at all. It's not in depth of tariffs and trade wars and all the economic conditions. So it'll be interesting to see what they say on the call.
Yeah, doing a search for the word tariff just does not exist. So it's a matter of how they, calibrate their responses. And I'm guessing a very non-committal and cautious approach, given what everyone else has said.
Well, there's a little bit of detail, not much. All of our markets grew sequentially with the exception of a seasonal decline in personal electronics. Seasonal, I don't know what that means. I mean, we do know what seasonal means, but is there something bigger happening there that we could say is indicative of the way consumers feel and the economy? We'll have to wait for the call to get details there.
I just want to mention another earnings if we could. I know this wasn't on our radar, but it's RHI as a ticker, Robert Half. It's a staffing company, and I've been paying closer attention to these given some of the concerns about the labor market and the economy. They did miss on several key estimates in their most recent quarter here. Revenue down about 8.5% in the quarter, and not quite seeing a forecast here, but they do kind of discuss a little bit some of the issues going on in the labor market. So something, a smaller company, but certainly something to pay attention to as we try to get a better read on economic conditions.
Yeah, no, absolutely. I mean, I just think every time a company, though, comes out and maybe is willing to actually make a commitment in terms of her revenue, that's a good thing, because we know that we talked to Gina Martin-Adams, and she said in her whole world of covering companies, she is like kind of amazed when a company puts out different scenarios, that she's never seen that. So here we have Texas Instruments talking about the second quarter. Once again, just to reiterate, second quarter revenue of $4.17 billion to $4.53 billion. The estimate is $4.12 billion. So that's pretty optimistic. And again, that's an outlook that company is willing to commit to, at least at this point.
Yeah. And again, the stock moving higher in the after hours trade. I want to go back to something you said, Romaine, about Robert Half and that idea that they're pretty much giving us a glimpse into the labor market as well. The revenue was down about 8% versus last year, but when it comes to the parts that really shed light on the labor market, contract talent solutions revenue down 14%, so double-digit percentage drop, and permanent placement staffing revenue also down about 10%.
Yeah, and this is kind of why I like earnings season, because it really does sort of create a situation where companies have no choice but to really put it all out on the line. As I know, we're getting other earnings out from Las Vegas Sands as well, Scarlet, Whirlpool, Lamb Research, a few others crossing the wire. Scarlet, take it away.
Yeah, let's start with Las Vegas Sands. The casino company reporting first quarter adjusted EPS of 59 cents, beating the consensus estimate by 2 pennies. Net revenue for the period was a bit shy of analyst estimates, $2.86 billion. They had a first quarter adjusted property EBITDA of $1.14 billion, slightly higher than anticipated, and they approved increasing their buyback program to $2 billion. So that stock not moving a whole lot right now, up about 0.4% in after-hours trade.
Well, in after-hours trading, Whirlpool shares are up by 1.3%. The company did not change its fiscal year guidance. First quarter net sales coming in just shy of estimates at $3.62 billion. The company sees fiscal year revenue coming in at $15.8 billion to beating estimates of $15.72 billion. First quarter ongoing EPS coming in at $1.70. The estimate is for $1.72. The company still sees fiscal year ongoing EPS about $10. That beats estimates of $9.30. Shares higher right now by about 3.6%.
And we're going to actually have the CEO, Mark Bitzer, on the program right around in the next few minutes here. I just want to point out, too, there is some commentary in here about tariffs, and it's specifically focused on the idea of competition from Asian producers and the idea that there's been a lot of hoarding, if you will, here in the U.S. side of stuff from overseas. They're saying that's complicating factors and a, quote, amplified negative temporary impacts as Asian producers loaded U.S. industry in anticipation of tariffs in Q4. It also saying that the threat of retaliatory tariffs started to impact their business in Canada and in Europe.
All right, so some interesting context. You guys are going to warm them up for us, and then we're going to also talk to the CEO of Whirlpool. So looking forward to some of the commentary that he has to say about his world. Lamb Research, I just want to pop over to that one because that one is also higher in the aftermarket. Third quarter adjusted EPS, $1 a share, 4 pennies better than what the street was expecting. The stock is up about 4.9%. Revenue, $4.72 billion. Again, that's a beat. It's up 24% year over year. Estimate was for $4.64 billion. And margins, adjusted gross margin, 49% versus 48.7%. So again, that's coming in better. And you're seeing, again, that stock pop up more than 4%.
Newmont Mining shares up in the after-hours trade, the largest publicly traded U.S. gold miner here. And if you've paid attention to the price of gold, well, you know how these earnings went. Sales up 25% on a year-over-year basis to $5 billion. EPS coming in at $1.25. You compare that to a year ago where they posted just 55 cents, and you compare that to the average of analyst estimates for the quarter of 93 cents. So a big beat on both the top and bottom lines. Not quite seeing the forecast here, but the big question is, how sustainable is this bump?
All right.
They actually just said they remain on track to meet their 2025 guidance. So the headlines continue to cross.
All right, let's also talk about IMAX, the movie company or the movie production company, reporting first quarter revenue, $86.7 million, does beat the average analyst estimate of $83.9 million. And the company is talking about in the release how it's done tremendously well by its global content slate, highlighted by a movie in China, Ne Zha 2, the highest grossing IMAX release of all time in China. It also captured 20% of the strong domestic opening for Sinners. I don't know if any of you guys watched that, but that was a big hit apparently for IMAX.
I'm too busy watching IBM shares move higher right now in the after hours, up 5.3%. The company sees second quarter revenue coming in above estimates at $16.4 to $16.75 billion. That beats estimates of $16.28 billion. First quarter revenue coming in at $14.54 billion. That beat estimates of $14.4 billion. It did reaffirm its fiscal year forecast. Once again, shares of IBM higher by about 5% in the after hours.
All right, quick check on Knight-Swift, the trucking transportation company. Total revenue for the first quarter, $1.8 billion. That's exactly what the street was expecting. Also looking, and let me just look at some other numbers. The year forecast still sees net cash CapEx about $570 million to $625 million. First quarter adjusted EPS, 28 cents a share. That's a penny better than what the street was expecting. And so stock, we're seeing just a little bit movement, but commentary about what they are moving or not moving around will be certainly interesting. So we'll look out for that. All right, guys. A lot of earnings. That's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Tim and I are going to continue on Business Week, and Scarlet and Romaine continuing there on television. We'll see you again, same time, same place tomorrow.